I didn't expect that he will know you. Okay. But he said, Ankur Mittal is coming. I said, don't get it wrong. It is not Anupam Mittal.
Or
Me calling Anupam
or
Ankur.
Lakshmi Mittal, or
No, no.
it's a famous last name.
The listeners should be careful about what they are listening,
A lot of successful startups are going to come out of this ecosystem.
Tomorrow's listed giants are today's startups.
That's what IPV has done. It has created a platform for many of you to come together and invest collectively.
Wish I was there when this company was setting up.
If the founder has not thought through how they are going to use the funds, guess what? You will lose your money.
They should be definitely listening to the series.
Absolutely.
One question is that while we are, talking about the promise and the premise of the whole startup ecosystem that India is today built up, there is a lot of notable contribution by the government initiatives.
Yes.
And without that, none of it is possible.
None.
And I would like to mention about the policies and the frameworks which Invest India is working on the FDI, larger institutional space, and Startup India working on the other, spectrum of startups. In your experience, how has government policy really helped bring out the best and unleash the startup entrepreneurship spirit, so to say?
Every day I learn new things about how this government is, or for that matter, governments at large, both state and federal, are supporting the growth of Indian startup ecosystem. Many startups I'm meeting, they all have got grants, which is non-dilutive capital, but real cash.
Real cash.
From universities funded by governments, by central government, by some of the schemes of central government, by state governments, other educational institutions. So it's just phenomenal. Then, like I said earlier, they are, they have policies like, for drone, like for example, it's Make in India. For defense, it's like Make in India. I'm not saying that we should go back to the license Raj and the globalization world where we should, not encourage foreign. But it is important that now that we are forcing ourselves to innovate, to create products, or we are asking them to come and set up shops here.
Yeah, but I would just like to mention on this point about manufacturing laptop house. I see that as a very important step myself, because it's not about license Raj, but the way I see it is, I think at times we should get protectionist about our own.
And what they are saying, Apple come manufacture in India.
Right.
They are asking Tesla to come manufacture in India.
Right.
And they are saying the same message, come manufacture in India.
Totally.
So I mean, are we flexing our capabilities? We probably are, but I think it's high time we should.
We should.
There is nothing wrong in being ambitious and having the resources and flexing those resources. And I think that's what this government is doing. Right. And then, they are investing thousands of crores via platforms like SIDBI and who are then funding the funds, and then who are then again putting money into these startups. So let's not forget the money that is flowing through those channels. And everybody, they're all doing a phenomenal job. Like, SIDBI is doing a great job identifying fund managers, Indian fund managers.
Yes.
They are promoting, more and more people to become fund managers. So I think overall, and then, like we said, UPI was a master stroke. I mean, we are far ahead in fintech, in financial inclusion, in digital payment. And now we have partnerships in Europe, in Singapore, in Middle East. So I think what is happening is that, like I said earlier, in logistics, they have done the same. Then I'm recently meeting a health tech startup, which has already got a 4 crore order from a government hospital. I mean,
wow.
It's just incredible that how the level playing field is being set. One of my startups, Tumok, it is working with state governments, solving the problem of point-to-point, multimodal transportation. So whether it is your Rapidos and the Ubers and the Olas, then your metros and your trains and your buses, and then your last mile, right? So all on a single ticket and stuff like that. So I think what is happening is that the government is opening up the opportunities. They're having these programs. They have now Startup Day, January 16th. They are telling the world to look at us. They are, Can they do more? Yes, they can do more.
Right.
Anybody can do more. But what has been done is good, praiseworthy, gives us hope and confidence, and that should be also something that our investors listening to this podcast should know, that we don't. The thing is, when we are sitting outside India, it depends upon what publication we subscribe to, and then that version we hear, right? I always believe that, listen to, extreme left and extreme right, and the truth is somewhere in the middle.
Well said.
So, and so therefore, don't just get carried away with what you read.
Right.
I also read somewhere yesterday that a news publication was talking about that how in a poor country like India, we should first solve the problem of hunger versus sending a space mission to the moon.
Really?
Now, I mean, these are two different Indias.
Yeah, totally.
We are solving the problem of hunger. Today we have the least number of people below the poverty line.
Right.
We have achieved, we have made those giant strides.
Right.
We have a large population, so it won't be easy.
Yeah.
But that doesn't mean we don't go for the moons and the stars and the sky.
Absolutely.
And right, that's what is happening. So I'm it's very promising what the government is doing.
The valuation frenzy that we spoke about, I cannot not discuss about the Byju's. And not because of the valuation frenzy, but also on the risk management and governance, because you are a huge advocate of risk management and governance yourself. I have seen IPB exercising. Now, if we have to blend valuation with governance in case of Byju's, what is your narrative of Byju's?
Again, valuation is in the end, after you run all the Excel sheets and all the Excel models, which I have done a lot in my life as a banker and continue to do so today. In the end, valuation is a price that somebody is willing to give and somebody is willing to take. So if Byju was able to raise that much capital at that valuation, somebody thought that valuation is fine.
Right.
It's not like, I could force somebody to give me money at that valuation. So Byju could have demanded, but there was another party to that deal who thought that, okay, those numbers make sense, that future makes sense, and therefore let's give that valuation. So I would like to say that, everybody is a party to the arrival of that valuation. We all get sucked into a certain environment in which we make these decisions.
Right.
And then that decisions get taken, and then we'll sink or swim with those decisions.
Right.
Now, corporate governance is something completely different.
Right.
That is something, it doesn't matter what the valuation is. That should not be ignored. And if that was ignored, see, I don't know what happened there. I'm not privy to exactly what is happening, how much of it is right, how much of it... I've read news as much as you have.
Same
and
here.
anybody else has, right?
Yeah.
So I'm not privy to any confidential information that has happened inside the company. We don't know what is right, what is wrong. What I would like to still believe is that at least what Byju achieved was proof to the world that, not just India, world, that education can be done online. Okay?
Yeah.
And I think that was a very big victory.
A big needle mover in that space.
Big needle mover in that space.
Right. But I would also, but I would like to add here, is it okay that the founder is the villain of the whole story and the governance is now all about the founder's lapses, or there has been investors all throughout in Byju's? So that's where my question on the risk governance comes in, and of course valuation you very well explained.
Again, some very good names are on the cap table.
Right.
I'm sure they would have applied the best judgment, the best information. And so again, like I'm saying, that I will not know what has happened inside, would not be comfortable even speculating. I'm an investor myself. I don't sit there every day, right? I can only infer and interpret from what I read and what I observe. Also, success has a very bad way of hiding things, because when something is going very successful, certain things are ignored, while in hindsight it's common sense, it should not be. But I would like to believe that some very smart people are overlooking the progress now. I still think there is a business inside that company. Now, whether it's worth $4 billion or $20 billion, that's debatable and that can be argued. Right? But there is a business out there They are teaching to the world. They have entered geographies that have never been entered, penetrated before. I think only over a matter of time, things will unfold and we will know
Exact nature of
and who is at fault. But one thing is for sure, it's not just one person.
You're right.
It cannot be just one person. But having said that, startup by definition means that they need their founders for everything.
Yeah.
You see, once you have management, then you technically become a company. You're no longer a startup. So startup means that the founder is involved, good or bad. IPV is a startup. Physis Capital that we have just launched is a startup because we are involved in everything, right? So, but let's see how this situation unfolds. I don't think we should rush to a judgment. I think there is still a lot of business in there. People are still studying Byju's. There are people who have benefited from it. So let's see how that journey goes.
Oh, interesting, definitely. Of course, I would like to understand for the audience, how does risk and governance takes place in IPV? So tell us this inverted pyramid of IPV.
See, that is something which we are very proud of. Out of 12,000 startups, we have funded about 170. And we've already talked about the success rate of those 170 and the returns and the exits, where we have 9 to 10 full exits, 22 partial exits, another 50 sitting in follow-ons. And some of them, others, which will tomorrow become successful, some of them will not be successful also. I mean, 8 startups, we couldn't return capital, and then there will be some more where we will not be able to return capital. But what is also important is that out of those 12,000 startups, if we have invested in 170, in the remaining 11,830 plus startups,
what happened?
there has been not even a single anti-portfolio. At some stage, there will be an anti-portfolio. It's a part and parcel of the journey as an investor. There could be 1 or 2 that I'm missing, but I don't remember seeing, we revisit that data very often, and there is no name that springs out that has gone on to become very successful that we said no to. And that is because of the process we have built. But it is not just IPV. IPV is not just its founders. It's actually thousands of investors. So we have 100 of investors on our selection panel who religiously, day in, day out, these are top guys. These are CEOs, CFOs, CHROs of the respective companies, running their own family offices, running their own startups, who help us evaluate these startups.
Oh, fantastic.
After that, they come to our investors, where 300, 400 investors at one time speak to the founders. We don't believe in setting up 30 minutes meetings with multiple investors, because we don't think investors at large will be able to gain out of those conversations. But when so many investors are asking questions and it comes from area of knowledge and expertise, you test not only, because even if it's pre-product, how founder is answering shows you the depth of the knowledge that the founder has been able to garner. So that is very important. After that, we do detailed due diligence, where again, investors like you get involved as subject matter experts. And then eventually after the investment, we continue to work with them. And like I said earlier, they come for quarterly calls, they have to present their numbers. And many of our investors are so sharp that they will just look at the number on the screen and they will say this number is not adding up. Right?
Some people are even remembering the last presentation, they saw the numbers.
They make notes, they make detailed notes. They will remember what number they said last time. They will say, last time when you came, you said May sales is X, and this time you're coming, you're saying May sales is X minus 10. What is this? And then they'll say there were some reversals that happened, because under GST regime, you have to book the sales when you do something. So there could be reversals and all. So there are genuine reasons, but they're so sharp that it keeps the founders on the hook. Still, can something wrong happen? Absolutely. We can't refute that, this is not a possibility at all. The best processes can, but what it will do is it will just help us become stronger.
No, totally, absolutely. And above that, you guys also keep sending the recordings of the previous calls. You will upload them.
It's all available on the app. You can listen. You can see what the founder said on when they came to pitch you for funding, and then when they are coming to you now to show their progress. So I think all those numbers are available. All those recordings are available. And like I said, we have some very sharp, smart investors. So I think that's what IPV has done. It has created a platform for many of you to come together and invest collectively.
Absolutely. I think it was an eye-opener for me when I started my angel journey. And not because I had money to burn, but I was very intrigued with the entire space where I felt that wish I was there when this company was setting up, because tomorrow's listed giants are today's startups, as I hope to see. And then I kind of met you, and my journey only became easier and very welcoming. The whole space just warmed up, as if they were just waiting for me to kind of show up.
They were waiting for you to show up.
So I was like, felt like a mini celebrity in my own way. Okay, so was that easy? So not that I didn't try to enter private market or invest in startups earlier. But earlier, I'm talking about 2008 and 9, when there were hardly any platforms and networks. And there was a lot of rigidity.
And who
It was
becomes a
a
member?
private club kind of a stuff, Scotch and Saturday.
I found it very difficult to penetrate through that club.
Yeah.
You needed references, then you
Yes.
were interviewed,
Yeah.
and then there was high membership fees.
Right.
And then you had a minimum investment requirement that
Yes.
you had to at least put in 10 lakhs.
Yeah.
But you didn't get a chance to invest everywhere.
Right.
Some deals came to you, some deals didn't come to you.
Totally.
So-
I have gone through this
so a
thing.
lot
I
of
was
opaqueness.
I was evaluated and rejected.
I
You-
probably was rejected by a couple of platforms who today call me and ask for my
Like,
opinion on
check.
some of these startups. But not sounding immodest, but I didn't think that approach was correct,
Yeah.
and that is why we launched IPV to
Right.
democratize angel investment.
Oh, fantastic, because that's also brought me. Of course, I went out and I didn't try again because I felt very belittled. I was
Absolutely, I also
okay.
felt I've done so much.
I have extra bonus to invest, and I want to back a startup, and I was not invited.
Not invited, not shown the startups.
Not at all.
And then when startup did come to you, eventually you were like, I don't know why this startup has come to me. Maybe nobody else is investing. That's why you are being asked to
There was
invest in it.
absolutely no hand holding
no
or
hand
any idea. But yeah, so I gave up in 2009 to kind of do that, and I was very upset with the whole process. And fast forward 2012, I was in Bangalore attending a conference where I met for the first time the OYO founder and Redbus founder.
Tell me you invested in both of them.
I didn't.
Ah,
By that time, they already had 100 million check from some investor, and they were like, but I did meet some unconventional founders backed by some Scandinavian or European funds. One was in neonatal care, and the whole philosophy of backing
see,
that.
international funds have been discovering India from that time.
Exactly, like somebody investing in neonatal and somebody having statistic that how many kids born die within the first 6 hours and XYZ, and how many incubators we are short. And this was happening right in Bangalore. And I felt that the new universe had just opened up on my face, and some or the others were very encouraging. Don't worry, you will get a chance to invest one day. Things were still not that open by 2012. And then fast forward 2019 or 2019 is when 20 I kind of reached out. Hey guys, I want to evaluate this space. So of course, you know that IPV truly stands out as one of the first choices for angel investors looking for deals to familiarize with the whole investment process. So I think you are becoming an institution of educating, and you can take this as a compliment because that's how I see
Thank
the
you.
value add. And then it is about the platform generating or bringing forth the curated startups.
We hope successive governments keep up this trend.
Right. I like the point that you said the listeners should be careful about what they are listening,
Yes.
and they should be definitely listening to the series all the time. Just make it as a default subscribe button.
Absolutely.
There's a heavy price which startup has to pay if you overguess the regulator.
Yes.
It's happened in the crypto space, and
Real money
but
gaming.
yeah, and now recently gaming. What do you think has tipped the policymaker? What makes it cautious and conscious? What makes policymakers conscious?
See, again, I'm a very small person to be able to comment on what moved the needle for the government.
Oh, humble you.
I think in their heart, they want to do the right thing for the public at large. If they think that there is a fine line between real money gaming and game of luck, game of chance, so while we allow it, but we want to make it difficult. Could that be the reason? But again, could that have been done 5 years, 6 years earlier, before hundreds of millions of dollars was poured into these startups by global investors? These kind of decisions can impact, some decision making. And it has affected industries. Thankfully, I don't have a investment in real money gaming. I do have an investment in crypto. But again, crypto is not wrong. Could it challenge the power of the central banking systems? Yes, it can. Can it be misused? It can. Is blockchain wrong? It's not. Are all crypto wrongs? They are not. People speculate on penny stocks.
Absolutely, good example.
That is as much a game of luck and chance as anything else. We don't differentiate a separate short-term capital gain tax rate on them, and I hope that doesn't change because of me.
I think you just gave an idea.
But what I'm trying to say is that the policies, we should recognize all the stakeholders. There are people working for those companies, real employment, real jobs, and they are at stake when things change. But I'm sure there were reasons. It's easy for me to say today because I don't have a real skin in the game. There are other people who are far, affected differently. But at least what I can say is that such examples are very few and far in between. So whereas 10 great things have happened, 1 or 2 not so great things have happened. But overall, the scale is still in the favor of good things, ease of business, simplifying things, promoting startups, right? Yes, 1 or 2 decisions, only government can tell what was the tipping factor, has been taken, and it has not gone down well with the industry at large. But then these same investors have also benefited from the favorable government policies in other sectors and spaces. So at the end of the day, what I tell all my investors is what I'll tell everybody else. Look at it as a portfolio. So even as a government policy, look at it as a portfolio. So if overall, most of the policies are positive,
yeah,
I guess
totally.
Every investor is willing to take few risks.
Totally. No, I get where you're coming from, and spot on, Ankur. But will it be fair to say that now investment theses would also have incorporated the regulatory headwinds? If
It should always do.
Right?
It should always do. I mean, when you invested in online medical delivery, there was no regulations around that.
Yeah, but in a conventional e-commerce business, there's no regulation either.
No, but the policies have changed there.
Right.
How much FDI is allowed, how much FDI is not allowed, inventory ownership, GST. I mean, even in normal e-commerce business also,
there is
a long list of policy changes that have happened. They have evolved, some for the good, some for the bad. Yes, government doesn't want a monopoly. Monopoly is never good for any sector, any space. So yes, the laws have changed there, even in a very simple business law of e-commerce, which is bringing a buyer and a seller together through an online medium. But yes, these policies have evolved, and overall, I think we are in a growth phase. When you grow, so even at IPV, as we are growing, things that worked in 2019 don't work now.
Yeah,
our investors are the first people to tell us, Ankur, this is what has to change, and we listen to them. We may not be able to change everything, and we may not be able to change everything at the spur of the moment, because it takes time to move, it takes time to change, but we listen. I think same is happening with we are a microcosm again for what is happening at the economy at large. So we are such a large economy with such a high growth potential that everything cannot be decided on day one. Some things will have to be decided as they play around.